So let me just introduce myself here. My name is Fan Yang. I'm the Chief Technical Strategist at fxtimes.com. And today we're going to have a Chartist Corner strategy session where we're going to take a look at some of the majors and the technical setups in these majors in the short and long term. So before I get started, let me read off the disclaimer. Information and opinions contained in this webinar are for educational purposes only and do not constitute trading recommendations. Forex trading involves a substantial risk of loss and may not be suitable for all investors. Okay, so with that being said, let's jump right to it. So if you were here in the previous webinar on FX Street, Greg laid out what's been going on with the euro dollar. Definitely saw some resistance over in the Asian session, and then we saw a break to the downside. So that was a good job, laying out all the technicals that happened there, and even in the 5-minute chart, which is what I look at as well. And here's the 5-minute chart where we had consolidation, and then we broke below the 200 moving average. We had a little pullback and so forth. So that's so you already got that. So I'll just pick up where he left off, which is we're at this. Let's look at the 4-hour chart. The euro dollar, very heavy price action. You have the RSI, failing to break back above 60. That's also the case in the 1-hour chart, by the way. During this whole consolidation, we had the RSI failing to sustain a break above 60. We cracked it a couple of times. We cracked it here again, but nonetheless, it was a failure to sustain that break. Okay, so now looking at the 4-hour chart, we also see that after the RSI dipped below 30, it failed to break back above 60, and now that it's pulled back below 40 and tagging 30, that's a very strong bearish continuation signal. All right. In the meantime, we are, in the very short term, we might be a little bit oversold, and as the RSI in the 4-hour chart and the 1-hour chart are both, hitting this 30 level. But of course, you see this strong bearish price action, and you know that in the medium term, as soon as that's resolved, we still have bearish pressure. Okay, but we are at a pretty important support cluster here, with this projected support trend line, as well as our 61.8% retracement of the October rally, and you see this previous pivot here as well. So this is actually a good place for the market to give us a little pullback. If you're looking at this downtrend and you want to get in on this downtrend, you definitely don't want to get in right now. This would be chasing the market at a very bad spot, in my opinion. So this is when you want to have the market sort of come back to you. I would like to see a slow crawl back towards 1.37, okay, back to this 200 moving average. That would be a very clear slingshot type of deal for me. Okay, but after such heavy, break, I would look for more of a 38.2%. Okay, so let's see where that would be. 1.3670 maybe. So this could take a while. This could take several sessions. Okay, if the U.S. session doesn't break lower, and we end up having sideways action. Remember when you looked at the 5-minute chart, you did see a little double bottom. You did see the market sort of failing for the first time. Not the first time. You saw several times here. You had minor consolidation, but this might become a little more than just a little minor consolidation. It might turn out to be a short-term reversal, and that would be good for you. That would be good for the trader looking on towards the downside, because it takes out a little more risk. When you try to go in here, you have that risk of reversal, and you're going to be giving up some pips before it has a chance to come back down. So right now, your risk reward might be a little bit unattractive, and a little bit of a correction could give you better risk reward. Okay, so there's also that timing factor. Right now it's near lunch. A lot of times after lunch, traders come back and you see a big pushback into the same direction. So right now it's standby mode for me, and I would look for some resistance after a pullback. Okay, so if we look at the 4-hour chart again, okay, so we established that right now is not likely a bad time to short at the moment, in my opinion. Okay, but what would be the target if we do continue to short, and or if we have a position and we're not exiting, what would be a target? Well, if after the 61.8% retracement, we are looking at the 78.6% retracement, which is also reinforced by previous support pivots here. Okay, so 1.3380 area could be another level to look for support. Okay, or another level where you might want to scale out or exit if you're already in the downside. All right, so that's the euro in the short, maybe medium term. When we look at the daily chart, okay, we saw this October rally. The RSI wasn't able to establish bullish momentum. So I would say, this market is bearish, and looking at a swing projection as such, I would actually, use that swing projection as well as these lows here, the 2011 lows, and I think also, okay, so December 2010 lows and the 2011 lows. These are important levels to monitor as well for support, and I suspect there we could get some more significant correction. Okay, so that would be the maximum target at the moment, 1.2970, maybe 1.30 psychological pivot. That's always going to be an important whole number to look at. Okay, so yeah, that's the market is trending now after a week of consolidation, but when you look at it from the daily perspective, it's not a heavy trend at all. There's sort of a range-bound feel to it, and if you even back out to the weekly chart, okay, definitely a range-bound market. Okay, and in the range-bound market, you don't want to mess with it when it's in the middle of the range, which is where our targets would be around. Okay, so definitely a short to medium term bearish outlook, but in the long term, it's sideways. Since the financial crisis, it's been sideways. Okay, so now let's go back. What if you are in the short and 200 plus position? I'm assuming you mean you already got 200 pips in there. Well, ideally, if you could scale out, this is where I would scale out at the 61.8% retracement. I would scale out to maybe half of the original position if you got in here, and look for possible re-entry around 1.3670 up to 1.37. Okay, so that would be my strategy at the moment for the euro dollar. Okay, so let's move on. Definitely a lot of movement in other charts as well, but the euro sort of is the lead at the moment. This is pretty much indicative of a risk-off mode. So you know what? Before this pound dollar chart I'm looking at, I'm gonna throw in the S&P 500. This is where you look at the sentiment of the market, the risk on, risk off, and you did see this dip, this risk off dip here. Okay, this is the 1 hour chart. You saw the RSI push back below 30. So we're starting to see risk off taken off in November after that initial November dip, and then you had this rally, and then now we're looking like a bearish continuation development. Okay, let's step out of the 1 hour chart. Here's the 4 hour chart, And what can we expect in the S&P 500? If we do some kind of swing projection here, we should be, at least in the 4-hour chart, we should be clearing some of these pivots here. You see this pivot here, this back here as well. And really what we want to see for further confirmation of risk off is this price action breaking below this 200 moving average. Okay. Also, in this 4-hour chart, you see the RSI failed to break above 60, so that means it maintains the bearish momentum started at the beginning of the month. Actually started from the end of October to the beginning of the month. And then if that falls back below 40, that's also a confirmation of your risk-off direction in this chart, in this instrument, S&P 500. All right, so that's just a little check of equity at the moment, definitely showing us heavy price movement. Risk-off is the idea right now. Okay, so let's go back to the pound dollar. So the pound dollar, in this 1-hour chart, you see it consolidating. You saw it in a rising wedge here when we started the month. And now in the Asian session we broke below. We actually broke below 1.5950, which is a very important pivot here. You see support here, support here. So now we're looking for it to test the 1.59, 1.58, 1.5880 support zone. Okay, that would be the next important support zone to test. And when that's broken, we're opening up further bearish outlook. Right now, I'm still, for the pound, it seems a little bit resilient at the moment. Okay, it's if you look at Aussie dollar, if you look at Euro dollar, they're all breaking their consolidation lows. Pound dollar is still hovering above the consolidation low. It might be, again, late to the party. And we've seen the pound late to the party a lot. It's sort of lagging the other currencies in the direction it's going. Okay, but nonetheless, it eventually does follow. So the anticipation is that we are going to test this 1.59, and we are likely to break it. Okay, let's go to the 4-hour chart. If when you look at this 4-hour chart, what you see is earlier at the end of October, we saw this double top and then a break below this rising support. So that was a bearish signal, but the market continued to consolidate. Okay, what you had there was a failure of the market to pull the RSI back below 40. You see, when the RSI kissed 70 here, almost kissed it here, and then when it failed to break back below 40, that means the bullish momentum was kept, maintained. Okay, but this time we do break below 40, and if we do sustain that break below 40, we're going to confirm with price action the break below 1.5880, and then immediately below that we have another little pivot zone here that's also matching with your 38.2% retracement level. Okay, but say you get a rebound from there and the market respects 1.59, okay, then you have further evidence that the market could come down to the next important pivot level, which is near 1.5680, give or take. You see here that we have a bunch of these pivots down here going back to September. Okay, so as far as Fibonacci retracement goes, we have this. This is where it's between 50 and 61.8% retracement. This is sort of your, at the moment, this is sort of your maximum, bearish outlook or bearish target at the moment. Okay, not as the bearish outlook is not as steep as it would look like in the euro dollar, because after this double bottom here, the pound has been very strong, and we're topping off here, we're coming back down. Really, it's sort of a sideways market, and when you have a sideways market, as I always say, you don't want to mess with the middle. Middle of the market is sort of your quote unquote fair price which is actually a very fleeting idea, fair price. That's always changing. But when you look at sideways action, that fair price or middle equilibrium could be represented by your 50% retracement, even your 200 moving average, okay, which is coming up soon. So pound dollar bearish, but not as bearish as the euro dollar. So if you're looking to, for dollar strength, the euro is a better candidate at the moment. Okay. We talked about euro and the pound, so let's talk about the euro pound. And this also reflects the heavier bearish outlook in the euro than the pound, right? Because we have the market here consolidate just like the euro, just like the pound, and then we broke below this consolidation low, and we're actually cracking even more important consolidation lows going back. So this is the 1 hour chart, so let's go to the 4 hour chart. You see here we are taking out these lows from October, from September. Okay, be careful though, because the euro pound has been very choppy. Here we took out these highs, and we had an immediate rejection there, and in about 3 days we wiped out our entire October rally. And then in the last week or so we consolidated, and now we're heading further lower. So this is definitely a place where you want to see a pullback before you assess the true nature of this break. Okay, we had here, this was a head fake. Let's not get head faked again here. Let's go to the daily chart. Okay, when you look at the daily chart, you see that the market is pretty much ranging, maybe with a slight bullish bias, which is being taken out now as the market is trading below the 200 moving average. So when the market is whipping back and forth the 200 moving average, when the RSI kisses 30, comes back up, kisses 70, that's ranging. Now you see the market here hasn't been able to break above 70. The RSI hasn't been able to break above 70, hasn't been able to break below 30. So the sense of direction isn't very strong in the euro pound. Okay, so you might not want to take your trending strategy here. You might want to look at your range bound strategy, which I think Greg also talked about in our previous webinar. In the very short term, yes, there is a trend developing, but in this daily chart, you do see some pivots you could look for support. Your next pivot here being 84.60, but more importantly down here, I believe 83.50. That's going to be a level where we should have a lot of demand or support for the dollar. So personally, okay, if I would have to look at the 5-minute chart to look at opportunities to short the euro pound, but I would be very fast on the exit, because it's a ranging market when you look at it from a daily perspective, and you have some pivots down here where you have to monitor to exit from if you're already short. Okay, so that's the euro pound. It definitely is bearish, but the question is for how much longer, because it is a very choppy market, as we've seen in the daily chart. Okay, so let's move on to another pair. Let's look at the dollar Looney. It's interesting here. We have this sideways action going, right? We were at important support levels yesterday in the Asian session, bounced off the 200 moving average in this 1 hour chart, and now we are testing these highs again. So this would be a third time testing these highs. Okay, what looked like a possible double top development is now turning into an ascending triangle. Okay. Nope. Okay. So I like to connect these pivots like that, and it does show you an ascending triangle. Okay, if we break above 1.02 1.0220 area, maybe even a little higher, then we are breaking to the upside and staying with the bullish momentum. You see the RSI here push above 70. So now we want to observe the RSI stay above we want to see the RSI stay above 40 and even preferably above 50 in a stronger trend. In that scenario, we have bullish continuation momentum. Okay, so I would look at it like this. Look for it to bounce off the 50%. Let me get rid of this. 50%, no lower than 61.8%. If it goes below 61.8%, I'm not very bullish on the dollar Looney anymore. But if it stays above 50% and bounces up, we could be looking at further bullish development. So let's look at the 4-hour chart to see where that could go. In the 4-hour chart, we see that the break above these highs here is indicative of a completion of a possible inverted head and shoulder. Now, whatever you call it, you basically had some lows here, you broke below those lows, and then here we had higher lows around the same lows as these lows. So, this could be a complicated head and shoulder. In any case, that's the point here. When you look at the 4-hour chart, is the bullish momentum. Okay, here we have the RSI kiss 70, failed to break below 40, and now breaking back above 60. Okay, if it does break back above 60, again, that's gonna confirm your price action breaking these highs here. Okay, and we could look for some pivots up here. Maybe even throw a Fibonacci retracement tool to look at some possible areas of resistance. And you see here 1.0370, 1.0380 area. That could be your first level of resistance, important resistance above our current neckline. Okay, of course this 50%, 1.0280, you could look at that too for some very short-term resistance, but I think this 61.8% has a more well-reinforced resistance there, so that could be your target in the short medium term, pending a break here. Okay, so that's the dollar Looney, looking more bullish now, but still has to break out of this consolidation. Still has to push the RSI above 60 in this 4-hour chart to give us more confirmation. Okay, so I just caught a question in the chat here. At what precise point of a move do you decide that price is now consolidating or ranging? Okay, so that's a good question, because that's always the elusiveness of the market. Are we in a range, or are we in a trend? Oh, excuse me. So how do we decide that? Well, in a trend, the easy answer is, in a trend, you're always going to see, for example, a bearish trend, you're always going to see lower lows and lower highs. And as soon as the market makes a higher low and a higher high, you decide at that point that the market is in a corrective mode. Okay, that's the easy answer. There are other ways to look at it. For example, even though this is in a corrective mode, in the higher, in my mind, when I see the RSI fail to break above 60, I'm still looking at this as a trend to the downside. Okay, now if the RSI also pushes above 70, then I'm looking at an even larger consolidation. Okay, so let me just there's two basic types of consolidation. You have your sort of flat consolidation, you have your zigzag sharp retracement type of consolidation. And this is a good case study for trying to assess those two. In a flat correction, the market is likely to be held under the 38.2% retracement, which was this case. And you also want to see that RSI hold below 60. In a sharp correction, you might see the RSI break above 60, and you're likely to see price action head up to 56 or 61.8% retracement. That's actually my initial plan. There was to get ready to short there. So you definitely saw that miss out because you didn't have any push to the upside. You had a lot of resistance here at the 38.2%, making this more of a flat correction. This was basically a ascending triangle. Initially it looked like a channel, right? But at the completion, you see that it was pretty much an ascending triangle, and you had a break. Or you could say there's an A, B, C, D, E, failure, and then a break. Okay, so I guess I answered more than just your question there. At what precise point? In this case, in the euro dollar, when the market here made a higher high, that was the point where we were looking at consolidation. And also, what type of consolidation? Failure to break above 38.2, failure of the RSI to break above 60. That means the market is more of a flat consolidation. Okay. Now we're down here. We're still in a trend. We're still in the same swing. We're not even creating any lows yet. There's one definition of a low is two candles against your position, against the direction. So actually, we might be able to call this a pivot now, a little pivot low, because you had one candle in the 1 hour chart, and now we're in the second candle, which is not over yet. It's still 11:30 Eastern, so this candle is not complete. But if it is complete at the moment, you can say, okay, this is our first low. Let's see if the market at this point, if the market is able to push back above this high here, that's going to be a sign of consolidation. So in a consolidating market, what do you want to do? You want to sell high, right? Buy low. So at that moment, that's actually, you might want to see it tested a second time. When the market, remember we talked about this retracement back to the 1.3670, 1.37 area. You could, one strategy is to short it right there. I would call that more of a naked strategy. A second one is to see the market test it again. Okay, if it tests it again and you see a failure candle, maybe that's where it's setting up a range high. Okay, and you might want to, at that moment, I will look for reward to risk based on this low. So I'm not going to, look for the market, or predict that the market is going to go down, because, once you enter it into a range, the market might respect the range low as well. So you might want to base your reward to risk ratio on the range target instead of the trending target, which we saw was down here. Okay, but you have in the back of your mind the possibility that the market will break lower, so you could have a little ease in your reward to risk. If you're like going for 3-to-1 all the time, and this is 2-to-1, maybe seeing that you have a potential to break lower and you have other signs that are pointing down, hey, maybe you could ease off the strict reward to risk. But you always want to have that more than 2-to-1. That's ideally more than 2-to-1. Okay. Okay. Question is, euro dollar really in downtrend now? Is bull killed out? The euro dollar is indeed in the downtrend as I said, in the short, medium term. But when you look at the daily and then the weekly chart, it's in sideways action. It's in a range-bound market, right? So it depends on what time frame you're talking about. In the 1 hour chart and even the 4 hour chart, based on the momentum, I would say yes, the euro dollar is still in a bear trend. Okay. let's move on. Okay, so that's what's going on with the Aussie dollar. Okay, Aussie dollar breaking consolidation low, breaking the November low here. You had a pretty sharp reversal here. So after this type of reversal, I would expect one more wave down at least. You had pretty good. This looks like a impulse wave coming down. So even if this entire move is to be corrective, you at least had your first wave down. So your A wave, I'm talking in Elliott wave terms here, your A wave coming down could be impulsive. Then you have some sort of correction here, and then we could be in a C wave coming down. And with that anticipation, I would look for a, C equals wave A wave kind of projection. And look at, especially now that it's breaking below 38.2% retracement, right? So if the market stayed here, bounced off here again, we would look for sideways action. We would look for maybe, like I mentioned before, 38.2%. That holds your flat correction. But now it's breaking below that. So the anticipation is that it's a more of a zigzag type of correction. Okay. We do have some support cluster coming up right here, 200 moving average, the low of this pivot here. But other than that, the market does look very bearish at the moment in the Aussie dollar. Okay, momentum here, it kissed 30, failure to break above 60, coming back below 40. If you look at the 1 hour chart, you have now reestablished your bearish momentum here. The market did crack the 60 level here, so you were definitely sideways action for a week, and now we're seeing some bearish momentum. And when the RSI dips below 30 like that, this is in the near term bullish because it's showing you oversold condition, but because of the fact that it's able to push down below 30, that should give you a bearish idea in the higher time frame. Or in a larger degree. So what do we want to see here to confirm the bearish outlook, or to get into the bearish? Well, this, you want to wait till this swing is over. Is it over? This could be two bullish candles. I would say, this doji here and then a strong bullish candle does show us that we could be in a corrective mode the rest of this U.S. session. But it's lunchtime. You want to wait till the traders come back in the afternoon to confirm that. And then if the market comes back toward 1.0280, maybe a little lower, maybe 1.0270, what is that? 80, that's 38.2% maybe. Between 38.2 and 50%. Actually this was 50%, 1.0280. So that'd be a good area to pull back to and look for resistance for further bearish outlook. And back at the 4 hour chart, we see 99.08 as the target, but always look at parity as an important level to monitor. Okay, here on the come up, on this reversal, you see the market held here just above parity. It cracked above parity, and then it sort of consolidated around it before breaking up, so not breaking to the upside. So again, the target could be 0.99, but also be wary of the parity level as an important psychological pivot, and not just psychological, but actual pivot area. Okay, so we looked at euro, pound, looked at Canadian dollar, Aussie dollar. So those are your commodity currencies also declining. This is risk off in full force, or actually risk off across the market. And so let me just address some questions here. Jack or Dan, your last wave up seems like ABC move as well. So I'm assuming you're talking about the Aussie dollar, right? So Aussie dollar. Okay, so you know what? I didn't talk about the longer term outlook here in the Aussie dollar. In the 4-hour and even in the daily chart, I see the Aussie dollar as a range bound market. When it's whipping across the 200 moving average, when you have equally sharp rally as a dip, you're in this range bound market. But I actually have a slightly bullish bias when looking at this daily chart because this looks like an ABC, so this looks like a rally that could be. Let's break that down. Let's take a look at the structure of that October rally. Okay. Okay, so this looks like your first wave. It's really difficult with so many. You definitely had a corrective here. So if you're looking at this as maybe a ABC, I don't know if that's what you're talking about, Dan, going up. This. I gotta be honest. I'm not sure if this is an impulse wave coming up, or if it's a or if it's a corrective wave coming up, because there isn't any overlaps. So that suggests to me that this could be an impulse wave going up. It's just complex. You don't know where the waves are. 1, 2, 3, 4, 5. Here, 1, 2. That doesn't make sense here now. So instead of basing my trading analysis on this now, I'm looking at the momentum and price action. So Elliott wave for me is not very clear in the Aussie dollar, but you're right, Dan. This could be could be the ABC, and then coming down ABC, and then going up ABC. So we're in a corrective mode. That's the point. When we're in a corrective mode, you don't have clear impulse wave up and then corrective wave down and then impulse wave up. You sort of have the market's flickering on and off in impulse and corrective. Okay, so let me move on after that question or comment. Okay, do you consider 5 wave down for euro from 1.4250? Next B would be leg up to 1.4250, then C. Okay, so long-term Elliott wave for euro dollar. Let's take a look at what that looks like. Let me get rid of these. Okay, so to me, when you look at the weekly chart, okay, we're in a correction. We're in a consolidation pattern. Okay, this is either a B, C, and this by itself is definitely not an impulse wave, right? This can't be a 1, 2, 3, 4, 5, right? Because it overlaps. But that doesn't mean that we're out of a development of a bullish impulse wave. This is where this is one of the scenarios. Okay, one of the scenario is that we have 1, 2, 1, 2, 1, 2, and we're nesting. We could be nesting into further bullish corrective wave. Now that idea definitely will be invalid if the market breaks below this low. Okay, if that's the scenario, we could be in this, continuing in this. This might be A, and then we could be in a complex B, and then another C. Okay, or this could be A, B, C, D, E. Some type of wedge coming down where, okay, so we violated this here, but it could be, I'm not, I don't look at that as a failure of a corrective pattern. This is still a possible ABC, X, ABC. right? Okay, let me just put that label. I think my favorite count at the moment, or preferred count, is like this. And you know what? This goes into, yes, I do consider the fundamentals, but as far as the fundamentals go, for the euro dollar, it's all about the euro crisis, right? Eurozone crisis, and as long as there's no resolution, we're in this correction. So that's why I favor this count, that we're A, B, C, X, maybe some kind of like A, B, C coming down. Could be a double 3. Okay? So that's the anticipation as far as continuing. If the eurozone debt crisis continues to be unresolved, another year, we could be looking at further euro pressure. Okay. All right. So yes, I do consider the fundamentals. So right now, but as far as fundamentals, it's all about what is the major theme. I'm not looking at these daily headlines as much. I mean, I'm kind of forced to look at them, following the markets. But as far as considering where the market's going, they're not as important as the major theme. If you look at the major theme right now, it's Eurozone crisis. It's whether there's going to be quantitative easing in the U.S. You have your Japanese intervention, how long that's going to fade out, and how long that the market's going to fade that intervention. So let's go to the dollar yen and look at that intervention candle, and then the market now fading that intervention. So that's been going on every time you see the Japanese yen intervention. What do you see? You see the market fading it, right? So that's what you're seeing now. And we actually saw a recent range support broken. So the market broke below that support, broke below 200 moving average, consolidating a little bit. Okay, so I would say this might be an area to look for resistance, the previous support levels. Maybe back to 78. Right now we're at 77, 75. So, and you have these very small, very weak bullish candles trying to go up against this previous bearish candle that was, even though it wasn't a very strong bearish candle, relatively it was bigger than any of the candles in here. I'm talking about the body, that is, because you did have a wider candle here, but it was all tail, which actually gives you a bearish signal here, the rejection to the upside. Okay, so now we're looking at these very weak crawl back towards 78, and hey, we could be going back down. Right now we're supported at the 50% retracement. If the market is going back down, the next level to look at for support is the 77.8 area near the 61.8% retracement level. But you also want to keep in mind the volatility, which is very low right now. So you might not have such a strong push towards 77. So dollar yen again. You're watching paint dry again, but there is definitely a bearish bias in this pair. Okay, I don't like to get into dollar yen too much. It's not a very interesting pair for me. It's always, you have wide volatility, very short volatility. It's like trying to catch a fly with a chopstick. It's like short volatility, and all of a sudden wide volatility. All of a sudden comes back to small, narrow volatility. Very headachy if you're trying to catch those breakouts. But as far as position playing goes, look for the market to be held below 78 for a dip towards 77. Okay. So let's what else do we look at right now? pretty much went over most of the pairs I wanted to look at. Maybe take a look at gold as well. That's interesting as it kind of comes back to the bullish side. Okay, so this is a daily chart. Okay, so what do we see in the daily chart? After that September slide, the market actually, first of all, failed to establish bearish momentum in this time frame, failed to break below the 200 moving average. Okay, and then we had this ABC correction back up here, and then after that we failed to break back lower, respecting these highs here, and the market continues higher. So it is now switching back to the bullish mode, at least in the short term. In the daily time frame, I would say there's a bullish bias to a possibly range-bound market. Okay, so I would be looking for a rally, but the target would be probably, well, this is a cluster here. This is a cluster of 150% expansion of this first wave. So if you call this A, and you call this B, and you call this C, the 1837 area is the 150, or 1839 area is your 150% expansion. Let me get rid of the retracement, Fibonacci retracement, to show you that. Okay, so here 1839, that's sort of my target at the moment. 1839, 1840, which matches with your Fibonacci expansion. Oh, I'm sorry, that's already a Fibonacci expansion. I meant to now put the retracement. So you see 78.6% retracement there as well. We already broke the 61.8 retracement and wave equality resistance cluster. So now the next cluster or next resistance we're looking at is near 1840. Okay. All right. So how do we? Let's take a look at the 4-hour chart and lower time frame to see how we could play this. Okay. Let's go to the 1-hour chart. Okay. So 1-hour chart. What do we see here? We do see the market flattening out. So we're in a consolidation, right? The RSI, however, is still above 40, showing you maintenance of the bullish outlook. The market might be waiting for this the 200 moving average to catch up. Sideways action, and when you see sideways action with bullish bias, the general trading idea there is to buy on the consolidation or range low, but not to sell from the range high, because if the market because there's more chance of a market to break to the upside than to the downside, or I should rather say, based on the fact that, or not the fact, but the saying that the trend is your friend. In a range, if the market has bullish bias, you want to focus more on the support levels and not as much as on selling at the resistance levels, right? That makes sense? Okay. So, all right, looking at this, we're sort of establishing a range. Okay, we're in the middle of the range here. So you want to maybe wait for the market to come back lower toward the 1775, maybe a little bit above that, for your intraday bullish outlook. From there, you will look for the target to be at this resistance level again. Okay, so that's a look at gold, and if that breaks, you let it go. This is 1800, so if it breaks 1800, that's going to be an important break. It's a psychological resistance there, 1800. Okay, but a break above that should clear some ways to your targets that I looked at in the daily chart, to your 1840 area. Okay. All right, guys. That's about it for me. So I'm gonna see what other questions we have here. Okay, thank you, Jack. Fed wants dollar down another 20%. I'm sure, everyone wants their own currency to be low for export and growth. And hence the trade war, the currency war. And that's what the QE is all about. Who's going to pull the trigger on the QE right now? And by the way, we have an important risk event coming up later on Thursday, actually. The Bank of England meets, and I'm pretty sure you want to pay attention to the details on quantitative easing. They are doing that, so you want to see. I don't have the exact numbers right now, but if they're expanding their program, the pound could become weaker. Maybe that's why the pound is not whipping or is not declining as fast right now. There's anticipation of what's going to happen at the Bank of England meeting. Okay, so pay attention to that tomorrow, or the next European session. Okay, so that's one mention of a risk event. All right. Might not be important that a president is having an orgy, but a 7% bond rate in Italy could be important fundamentals. Yeah, so Berlusconi out, right? We have this guy, Mario Monti, who might be taking over in the interim. So when they are done with the austerity vote, sometime this week, I think, tomorrow maybe, then we're going to see Berlusconi out. Now, we already have hard to pronounce, Papandreou from Greece. He's out, so we got another Papademo in there. So we see a lot of leadership changes at the moment. But in the bigger picture, it's still unresolved. You might have some factions that are favoring these moves, but in the big picture, of course, this whole Eurozone crisis is unresolved. But hey, we have some changes that could be good or could be worse, right? You never know. So euro dollar, for example, should be in the long term should continue to be sideways, and in the short term, bearish. Okay, guys. So thank you again, and just a little plug for myself here and the website I manage, FX Times. I also run these webinars at fxtimes.com. Today, actually later at 3 p.m. Eastern, I'll be back again to take a look at the markets at another Charters Corner. And we also have some interesting webinars in the morning as well. So check us out at fxtimes.com when you're not busy at FX Street. All right. So thank you guys for your attention. We had good discussion here, and also you could look me up at Skype. I like that. I like to talk about the markets, outside of webinar rooms as well. Swap trading stories and whatnot. So look me up in Skype, fan.yang.cmt, and we'll chat about the markets. I could always learn from you guys as well. You guys keep a pretty good, pretty good eye on these fundamentals. I'm focused on the technical, so I always like to hear what everyone has to tell me, especially on these geopolitical matters. All right, so let's chat, and we'll see you next time. I'm back at FX Street. Hope to see you guys there again. And in the meantime, check me out at fxtimes.com. Okay, that's it, guys. Have a good one. Trade safe. Always mind your risk before your reward, and be easy out there. Bye-bye.